Bank of America, BAC, and that most likely is on the New York Stock Exchange, sector financials, industries, banks. And I did a podcast, I think back in March. I had this still in its stage 2, way back here. But how things have changed, and since I did that podcast, the price action has slid sideways, down, up, down. And look, if you remove those wicks, that's a clear channel on the monthly candle chart going down. What's a channel? Lower lows, lower highs, 30-moving average or moving average starting to go downwards. And actually here busted below that descending channel. So that is... remove all drawing tools. All right. So let's start with the basics. Identifying monthly candle support and resistance. That's the important stuff. We're a little late here for the action. So until the price action closes above 32, there's nothing to see here. Bullish wise, there's no implied measure move to the top. If ever the price action is below the 12-month average, you don't necessarily want to short it, but you don't want to be in it because the weight, you're starting to have price action below the 12-month average. You're starting to create weight below it. You're starting to flatten out that 12-month average. And eventually, if you stay long below that 12-month average, it actually starts rolling over. And that is powerful. 12-month average takes a lot of price action to start moving it. And if it starts going down, that's going to impact all the smaller time frames. The weekly, the daily, all of them, they get tugged around by a big Papa monthly candle chart, guys. So always start there, draw where the supports are, the monthly defined supports, and you'll see on the weekly if ever you have bounces and you don't seem to see some weekly defined support but you see it's pulling back because maybe you're heading into monthly defined support. And you could even see it here. Sideways move, exploded, far away from 12-month average. Sideways move, getting close. That's healthy. Then it broke out. So that resistance here is now support, what I call wall. So you draw that line. Time moves on. It does what it has to do. Now it's going down. And after that, it's slowing down or testing this previous resistance, now turns support. But on the weekly, you might not see it exactly at that level. But it's good to know it's there, and you'll see on the weekly when we want to time an entry, want to expect where it's going to pull back up. After that, where's the previous support, now turn resistance, and we're going to time an entry close to the moving average, close to the previous support turn resistance. And if the volume's contracting, then we know that we're able to position ourselves and to sell into that strength. Because in the downtrend, you sell into strength, and when you're in an uptrend, you sell and you buy into weakness. So when you have pullback on weakness, you buy into it because you have the trend in your favor, and you do the inverse when you're on the monthly, guys. All right. Did I have an implied measure moved? Oh la 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 la! I think right here we had that close below that monthly defined support. Pulled back above, close to 12-month average, then went back down, and the target's down here. What I don't like about that target, it has to go through what I call that wall. Sometimes the symmetry is not perfect. I just do my classic chart trading framework, I would actually either not play that or reduce my target, adjust my target to have a better chance of hitting it, increasing my probabilities of exiting a successful trade. But right now, we're just doing monthly candle charts to establish the higher prevailing trend. And you see right now that it's going downwards. The 12-month moving average is going downwards. Price action now has been 1, 2, 3 months ongoing. It's going downwards. We broke down below important support. Down, down, down. So what could happen here is a pullback at these levels and then maybe give us a chance of an entry on that pullback. All right, let's zoom in on the weekly. Ooh la la. Okay, a lot of things here. Let's remove that. Move that. First thing, Mansfield relative strength. Stan always had you compare the strength of your stock versus the index it's in. I'm using the baseline, the SPX. That's a baseline to compare ourselves. So you want to be, if you're looking for stage 4 decline, a short, you want to be underperforming the SPX. And what's great about this indicator on the TradingView is that you get a red highlight if the price action is below the 30-week average and if the 30-week average is declining. So it's some of those checks, those weight of evidence that Stan has in his book. You never want to short a stock that is above its 30-week average, and you don't want to go long if it's below. You want to wait. If you really want to play a stage 2 long, well, you got to wait for that to go sideways move, for the 30-week average to start flattening out and then going back upwards. But right now, there's no use to look at that right now because we're really closer to a stage 4 meltdown. Okay, let's check it out. Okay, crescendo volume here on those down candles, not a good sign. Contracting volume on that sideways move pullback. Increasing red volume on that crazy red candle. Here is, this chart kind of looks like XFN, the financials capped index, S&P. You could probably overlay it. It looks pretty much correlation, almost 1-to-1. Horizontal breakdown line, close below it. We just need that monthly close below this level, but we still have 3 weeks to go in December. We're below the Ichimoku cloud, so that support is not there anymore. Declining 30-week moving average. What else do we have? Right here, lower highs, lower lows, descending channel, downtrend. So if the 30-week average going downwards wasn't enough indication for you, you see in the price action, lower highs, lower lows. That is not an uptrend. It's not something you want to buy. It's you have all that weight going downwards, that pressure going downwards. You got to respect it. So what's going to happen here for our entry, guys? Okay, 30-week average is probably going to start going down like that. Screw that. If we get a bounce off this monthly defined support and doesn't break down totally through it, we could have a pullback to this breakdown level here of this top pattern and then go down if there's really no strength and really people are selling. And if there's slight more strength, that small pattern here might not hold and you might actually get a pullback all the way up to the higher defined breakdown level right here. And then this would be awesome because it's outside of the cloud, close to 30-week average. You're protected by this previous support, now turn resistance, and this would be a great entry right there. The Mansfield relative strength would probably start going like that. You never want to short if it's going upwards against the SPX, so you'd have to wait for the price action to start going back downwards and for you to resume your decline against the SPX. And after that, you know that lull has been completed, that pullback. Then you would enter here, and if more evidence you want to look at, contracting volume again. If it's contracting on that pullback, then you know that rally was not meaningful or less meaningful than it should be, and that you have higher probabilities of that resuming that downtrend. Remember, if you start on the top on the monthly and you see a stage 4 and then you're not sure on the weekly or on the daily, hey, my monthly was going downwards. The trend was going downwards. So that should recomfort you in knowing that those pullbacks will be simple pullbacks and not reversals, or less chance of being a reversal. So you always want to, that's how you increase your probabilities, not by praying to the gods or sacrificing a lamb. You increase your probabilities of having the trade go in your direction by observing all those elements that Stan Weinstein has observed, that all these gurus out there that have been looking at charts for years and years, and they all pretty much overlap these trading frameworks. Some people look at Fibonacci retracements, moving averages, 200, 150 day. It doesn't really matter as long as they all pretty much are based off the price action, and they pretty much give all the same signals that you're in. If you're in a stage 1 sideways move, stage 2 going up, 3 sideways, and then stage 4 down, it pretty much resembles everything. So don't be too harsh on people using a different system than you. It doesn't really matter. You could judge them a little bit if they don't have a risk and money management. That's kind of dangerous, But other than that, they have a lot of overlap, and different systems align with to give you the pretty much the same trend, same direction. So this actually, man, it's out of the cloud. It's pretty much this is pretty much a stage 4 entry. Just a question now of where do we enter. Here you have some weekly defined support. So here you have this previous resistance, previous resistance and support. That's what I call a wall. And after that, you have that natural support down here. So if ever the price action does melt and goes back here, that's another area here that you could have an entry through. Average is going to have been going downwards. So all these pullbacks here, either the first one at this level, second one if it goes back a little higher, or the third case is if it really plunges and goes back up here, then you have another shot to enter. So you could let it play out. And because right now you're getting far away from the 30-week average, it's likely that it's going to bounce eventually. So you want to let it bounce and then short it on that bounce on the way back down, guys. But this is still super early. There's no fear of missing out. Look at that. It's been going up for a while. There's a lot of vacuum, a lot of room down there. And the 12-month range is just trying to go downwards, guys. Eventually, remember those targets, top patterns, giving targets, making bigger patterns, morphing the price action, and eventually there could be a top pattern here bouncing off this monthly defined support, and then you could have a big head and shoulders, maybe left head, maybe right here, and then you get a crazy target all the way down here to these 2016 lows, and it builds on from that, guys. And here you can see monthly defined, previous monthly defined resistance, now turn support, what I call a wall. And on the weekly, same thing. You could even, after you go through all this area of work, if the price action goes down, you could expect a bounce here, go back up, and then maybe another try, and then go down. Never goes in a straight line. Psychologically, sometimes, I have a price target, and it's going to go down here. Well, you got to really see and imagine that it's never going to go straight. Never go straight to target unless you're really close and you have a big move. It's up and down, up and down. You just want to make sure in the trend, you want to make sure those pullbacks have less chances of being reversals. And that's all it is, guys. That's how you set it up. All right, man. Bank of America, stage 4. Just wait the time and entry. Ciao, guys.